Here's a number that should make every business owner uncomfortable. Major banks approve only 27% of small business loan applications. That means nearly 3 out of 4 who walk into a bank looking for help get told no. And here's what's worse. 33% of businesses that close say the number one reason was lack of capital. Not bad products, not bad ideas, just no money to keep going. If you've been turned down by a bank, or you're wondering how you'll cover payroll, buy inventory, or seize a growth opportunity, this video is for you. I'll show why banks say no, the real alternatives, and the resource I recommend to every owner I know. Stay with me. Because the difference between stuck and scaling is knowing where to look. Traditional banks are built for low risk. Their underwriting looks for perfection, not potential. First, credit. Many want 680, 740 plus for best odds, with clean histories. Second, documentation. 2 to 3 years of tax returns and financials, no gaps.
Third, collateral, assets to secure the note. Many small businesses just don't have it.
Then DSCR. They want cash flow comfortably covering payments, often 1.25x or more, plus time in business. Under 2 years, approval odds drop sharply. If even one box misses, the default is decline, not discuss. That turns real opportunities into missed ones, second locations, new equipment, bulk inventory buys. Meanwhile, payroll, vendors, and seasonality don't wait. Cash gaps widen. Even SBA routes can stall without pristine files, collateral, or time. It's not just you. This is systemic across industries. Only 48% of owners say they have all the funding they need, and 66% significantly struggle financially. The gap isn't effort, it's capital. Good businesses die quietly from cash starvation. The fix starts by widening the funding lens beyond just banks. Let's walk the real alternatives and when to use each. Quick note, none of this is one size fits all. It's about matching your cash flow, use of funds, and timeline to the right product so the money helps, not hurts. Here are 6 proven paths beyond big bank loans. Lines of credit. Flexible, draw when needed, great for payroll dips and inventory turns. Short-term loans. Fixed lump sums for quick ROI projects, marketing pushes, build-outs. Equipment financing. The asset secures the deal, preserves cash for operations. Invoice factoring. Unlock working capital from slow-paying invoices. Revenue-based financing. Payments flex with sales useful for e-commerce and seasonal cycles. SBA micros and community lenders. Lower rates, more docs, longer lead times. The key is fit. Match use of funds, time horizon, and cash flow pattern to the right structure. Avoid mismatches like long-term debt for short-term needs or daily remits on thin margins. If you don't want to shop dozens of lenders and decode fine print, use a matcher that does this all day. That's where Rock Financial comes in. Rock Financial is a funding matcher for small and mid-sized businesses, connecting you to the right lender for your situation. A plus BBB rating, 4.9 stars on Trustpilot, and programs from $10,000 to $10 million subject to approval. They move fast, keep terms transparent, and explain options in plain English. Step 1. Quick application. Step 2. Rock compares dozens of lenders. Step 3. You pick the fit and get funded. Often a soft credit pull to start, plus recent bank statements and basic docs. For qualified files, approvals and funding can happen in as little as 24 hours. They present clear options, rates, terms, payment frequency, and any prepayment benefits, so you can decide confidently. Use cases: contractors gearing up for bigger jobs, e-com scaling inventory, restaurants smoothing seasonality, startups bridging proof of concept. No obligation to accept offers. You see the numbers first. If it's not right, you walk. You get real support, fast responses, and guidance on what improves approval odds. Owners rave about speed, clarity, and savings. 4.9 stars across thousands of reviews. They've been noted for transparency and fast funding compared to legacy approaches. I recommend Rock because matching matters. The right offer can mean taking that profitable project this week, not next quarter. 5 quick scenarios: what the owner needed, what got funded, and why the match worked. Contractor lands a $180K job. Needs $60K for equipment and labor mobilization. Match: equipment financing for the skid steer plus a short-term working capital top-up. Result: funded in 48 hours. Job starts on time. Payments aligned to progress draws. E-com brand needs $150K to buy inventory ahead of a launch window. Match: revenue-based financing so remits flex with daily sales volume. Result: smoother cash cycle, no missed launch, remit scale with revenue. Restaurant experiences off-season dip, needs $40K for payroll and patio refresh. Match: short-term loan with prepay benefit, pay down faster when busy season hits. Result: payroll met, refresh completed, earlier payoff saves total cost. Software startup needs $75K for pilots. Bank wants collateral they don't have. Match: a modest line tied to early receivables and a phased release as milestones hit. Result: pilot wins, revenue begins, line expands with traction. Seasonal service firm needs $25K to hire and market ahead of peak. Match: working capital with weekly payments synced to book jobs. Result: crews staffed on time. Campaign pays back during peak. Getting started is free and takes minutes. You'll see curated lender matches based on your goals and cash flow. Pick your offer, upload docs, and get funded often in as little as 24 hours. Use the link below. A+ BBB, 4.9 stars, $10K to $10M programs. No obligation to accept anything you don't love. Banks say no, don't stop there. Get matched with funding that fits your business. Links are in the description, along with my podcast and email if you have questions. I'm rooting for your next move. See you on the inside.